All right, everyone, welcome to the next episode of the PropTech Genius Show. And the genius today is Brian Daly. Hey, Brian, how are you?
I'm well. It's nice to
Do-
be with you.
Nice to thank you. Do you get called the genius a lot? I bet you do. I bet you get called genius.
I don't know. Maybe a genius in my own mind. I don't know. I haven't heard that term applied to me, but we'll use it for today and see how it goes.
You get one chance in life to be called a genius, and you don't have to have Albert Einstein hair. Like you can just do your cool thing you got going
Okay.
on,
All right.
and
We'll
you're
go
good,
with it.
man.
We'll go with it.
We'll go with it. Exactly. All right. Well, today we get to talk with a really, really cool founder, and y'all are doing such fabulous things. I'm so excited you agreed to come on my little show. And, but we can talk about ground floor and how cool it is and how revolutionary it is. And I will tell you, I was a real estate syndicator. I've been in private equity for a long time and I was a fund manager. So I get where you're at. But by making it accessible to the little people, I applaud you. I mean, that's just really super cool. But I don't need to tell your story. You can tell everybody what y'all do. So you can take it away.
Sure. Where to begin? Brian Daly, co-founder and CEO of Ground Floor. We started Ground Floor in the wake of the 2012 Jobs Act. I was very interested in that law because I've been an investor since age 15. And since I was 15, but like summer jobs, my dad sent me to the library to learn what a mutual fund was. You had to
Okay.
go to the library, and
I know, yeah.
mutual funds were a thing in the 80s. Now I've just dated myself. See, there you go. But I've been a hobbyist investor for a long time, and I was interested in this law because I thought, wait, there's a whole category of investments that ordinary investors, individual investors who are just maybe trading stocks or something can't get access to, that institutions have, that if you had a private wealth manager, you'd have. And I got really interested in how that law might create this whole new category of investment products. And we built a company around that idea.
That's awesome. That is so cool. Yeah. So tell us about how you got started. And, obviously it was, you had inspiration there, but like creating the tech and you're dealing with the SEC, man. Like they're so much fun. It's a joyful experience to let the SEC crawl up your shorts.
I
Um,
will, I'll say this, we didn't know exactly what the product would be when we started.
okay.
We didn't know that it would be in real estate. I wasn't a real estate person.
Oh,
Uh,
okay.
since then, we financed the renovation or construction of about 7,000 houses.
Yeah.
We've put out about $1.5 billion in capital. So now I guess I am a real estate person, but hard to picture 12, 13 years ago, I was not. And we were just searching for a product category, and we knew like every entrepreneur has to find product market fit. That's a challenge for sure. But when you're building a financial product, especially if you want it to be available to everybody, you have to build product market regulatory fit.
Yes, true. Right. Yeah.
The first 2, 3, 4 years of time in our startup,
Mhm.
we founded in 2013, were spent working on that sort of the product market regulatory fit.
Wow.
We actually were the smallest, slowest growing kind of startup in our space because we were going the regulatory route. And the reason we were going the regulatory route is we wanted to build a product for everyone. That
Yeah.
took a lot of time. Ultimately, it took us about 4 years and a couple $1 million of capital, which flowed to lawyers and accountants mostly. And it took us a good amount of time to get it done. But by 2017, we finally had our regulatory foundation built. And there was a whole journey along in parallel with that of sort of figuring out what the investment product would be and what would the user experience be and all those things that every startup has to do. But on top of it, we had to do all this regulatory work with the Securities and Exchange Commission.
Oh yeah, and they're just so much fun. So are you FINRA licensed? Is that what you had to
We
get?
are an issuer,
Oh,
so
you're
we're
an
not a
issuer.
broker dealer. So we
Okay.
are not regulated by FINRA. We're just we have regulatory oversight that an issuer has from the
Okay.
SEC.
Okay. All right. But still, it's in the umbrella of FINRA and they're just like no fun. No, I get it. Most of
Well, I
my
will say this though. I mean, as painful as it was, as expensive as it was, and for an entrepreneur, the hardest part is how time consuming, right? How many years it took.
Yeah.
Because you feel like, wow, I'm not making. I will say that the regulatory process, there are important ways in which the regulatory process actually made our product better. And a lot of people don't really realize this, but being constrained in these ways and having challenges thrown at you from a longer term perspective, a societal or political perspective,
Mhm.
I think is actually pretty important if these products are going to live on for decades, right? I look at the regulatory gauntlet that we ran through, and we still are subjected to, because we're not done innovating. We're always creating new products and pushing the boundaries of what the rules could be applied to do.
Mhm.
Congress and the regulators don't think of everything entrepreneurs are going to think of.
Right.
So, we're often sort of probing gray areas or trying to do new things. So it hasn't ended over 12, 13 years. We're still out there on the forefront doing it. But there are really, really important ways in which that process and submitting to regulatory oversight has made our product better, more
Yeah.
performant, and we built it to tighter constraints than what a lot of the, more cowboy-oriented, startups in our space did, and they aren't around anymore.
Yeah. No,
They've traded for 10 cents on the dollar to a competitor, or they've gone out of business. There have been several. The field is littered with companies who sound like ground floor
yeah.
in real estate investing, but are not at all like ground floor because they didn't build to those tight constraints and submit to the regulatory oversight.
Well, that is so true. I mean, FINRA is not going to let you, they're going to force you to be structured correctly. They're going to force you to do, I mean, you had to get your stuff audited. Like you had to, I mean,
But
you had to go.
we submit to an annual audit and
Yeah,
have financially for 9 years. Like, this is why, like, yes, we built it for the investor who wants to just get started investing,
right.
but we also have people who are deploying hundreds of thousands of dollars,
Yeah.
even millions of dollars on our platform because we submit to the public regulatory standards.
Yeah.
You can see audited financials. We look and feel kind of like a public company in
Yeah.
important respects. I don't know how many other investment platforms in our space, well, actually, I think there are none, where you can go see audited financials for us going back now 9 years.
No, they
Exceptional.
don't. Yeah. And then you're required to keep cash reserves, and you're required to keep, I'm assuming you're required to keep cash reserves, right? And different things that you show up. I mean, it's, and I will say real estate syndicators had their heyday.
Sure.
It was fun, and everybody was chasing, I need to find the latest real estate deal and jump in my money. And a lot of people got into that game, like chasing the shiny object. And now a lot of investors got hurt because they were chasing syndicators that, obviously weren't FINRA regulated. We got an exemption. I was 506B, 506C girl, like forever. I did a ton of those. And I didn't have to submit to what you submitted to. So
Right.
it's, but yeah, I mean, I get it. I get it for sure.
It's hard as an entrepreneur, though, because as an entrepreneur, you just want to go, go, go. And we were fortunate that in our early days, we actually moved our company from North Carolina, where we started in the Raleigh-Durham Triangle area. And we moved in 2014 to Georgia because Georgia was only one of 2 states in the country that had a blue sky exemption to do this sort of offering
Really?
on a low scale. Yeah, we could only finance properties in Georgia, and we could only solicit Georgia investors. But that was enough for us to have something to work with and to make progress as entrepreneurs. And it was very humbling because we had competitors who were raising millions of dollars from Andreessen Horowitz or whatever, and sounded so much more impressive, but we were playing for the long term. And that's how we got through that regulatory process, is we could show what we had in mind. And what we had in mind was very different from real estate syndication generally, very, very different from how anybody had really ever thought about productizing, a way to invest in real estate that now I think is kind of catching on, right? It took a while, but now the market's sort of catching up.
Yeah. So what is tokenization? I mean, people don't understand that either. but but I get it. Like, well, I sort of get it. Like I'm smart enough to know that blockchain doesn't equal crypto. Like
Okay.
I got that. But people are
Got it.
starting to do the
Sounds
whole,
like you've studied up a little bit on
yeah,
this.
I just knew a little bit. I'm only the chair of the US PropTech Council. I might want to know a little bit about blockchain. But
Sounds like you know more than a little bit, but yeah.
yeah, yeah, but I've seen, like, Red Swan came out years ago and they were tokenizing real estate, and it was just another way to create a liquidity and what I figured out with Red Swan was, and you really, yes, you can tokenize real estate. Yes, okay. And in some time, form or fashion, the SEC will figure out what to do with it. And I don't think they know, like, they don't understand it enough to know what to do with it or how to regulate it, but I think they eventually will. But I think but that might, I don't know if that, how that, I mean, people are just on the forefront of that. Are y'all looking at doing
We
anything?
have looked at it. I mean, I've been interested in cryptocurrencies generally, and especially Bitcoin as an asset for 5, 6, 7 years now. I've always really liked it, and it has an appeal to me as a technologist and as an entrepreneur and as a person who's concerned about our macro economy. I'm
Right.
very, very interested in those things intellectually. For business, our philosophy is that we start with what the investor wants and how we can provide it to them under existing regulatory constructs.
Okay.
I think we made smart choices thanks to my co-founder, who's a real visionary in this area. I mean, the reason I met him is because I was interested in this law, and he actually lobbied for Title III of the Jobs Act. He was part of the group that was on in the Rose Garden of the White House when President Obama signed it. He knows the regulators who were ready to implement it, the interest groups who lobbied for it. And he's a real visionary and authority about how the rules can be used, how the 33 Act could be utilized in that construct. And, we realized that we needed to tap into existing rules. We couldn't hope that the rules would change, or we wanted to use existing rules, and we wanted to build for what we knew investors wanted. And we continue to look at tokenization. I think there will be a time when tokenization, becomes an approach to representing securities, digital securities, like the ones that we sell from a centralized, sort of Web 2.0 in a Web 2.0 format. There will be interfaces and points of distribution and user experiences that address the needs of the mass market
Right.
and address the needs of the business. Today, that's just not true. I mean, we've experimented with a number of them. The user experiences are not there. The pools of liquidity are not there. In a lot of cases, the security model is not there. And the business rationale is not there. Most of what we can do, what customers need us to do or want us to do at a mass market scale, doesn't require that technology stack. Even though I like it and I see the future of it, for us in all practicality, building a business, it's not something we need or that our customers are pushing us to do. But that doesn't mean that we're not tinkering. So, for example, if you are into it and are crypto native, because I love this stuff, and there's some other people in the company who do. We have a USDC wallet, that we built in partnership with Circle, and you can send USDC to us and then invest it on our platform. And so that's a way for crypto native people to not have to use fiat on ramps and off ramps in order to participate in and we have a handful of customers that do that. I'm one of them. And I think so there will be an interesting future there. There are use cases that I'm watching that I think could make great sense. I know other founders who have tinkered with it and reached similar conclusions to ours. So, it's a wait and see for me.
I think it becomes really valuable when you have a robust secondary market, because then the liquidity thing happens, right? Until you can get a robust secondary market in the US, no one's gonna go, well, yeah, it's nice to have. It sounds cool.
And that would be a pull, right? If there was a robust secondary market, and I do think the tokenization approach and the option for self-custody, and the option to write smart contracts around these things, we've looked at NFTs as a way, to implement some of our securities. I do think there are use cases there, but I'll tell you what, if you look at the secondary markets that exist in private market securities, like startups, Start Engine has a secondary market, for example, where you can notionally trade, you can post, shares of a startup that you own, or you can, for example, you can own shares in Ground Floor.
Mhm.
And every 2 years, we offer our customers the opportunity to participate as owners of our company by buying shares in the company. We've used that instead of venture capital.
Okay, that's cool.
To our company, which
So
is
they
pretty
can
cool.
double down, triple down.
Yeah, and people
great.
do. So we started doing that in 2018, and people have bought multiple rounds. And if you want to sell, there are secondary markets out there like Start Engine, where you can go post your shares for sale. The problem is there's no bid. And when there is a bid, it's the bid ask is very far apart. And that's damaging in all practicality.
Right.
And so if that's true, with traditional rails, how much more so might it be true with tokenized rails? So, but then again, there are vast pools of liquidity that are crypto native. And, they're going to get organized at some point. And when they do, that's going to pull issuers like us right forward into that. And we'll be right there,
Yeah, no, for sure. Like I know Europe has done some more stuff around blockchain regulation, and there's actually a pretty cool market in Spain that has about 10,000 investors in it. So I mean, like, that's the value. Yeah, you get enough investors that will trade in whatever exchange you're creating, then we can do something, right? But until you've got that, it's like really, really tough to get anybody to go.
And then you also have to have the right regulatory foundation for it.
Oh yeah, for sure. Yeah, and
so
I think
so that we're not violating securities laws, and like we're not interested in violating securities laws.
Yeah, no one wants to do that because the SEC is never fun when they come knocking on your door.
Money transmitter laws and securities laws, two sets of laws. I speed limit, fine. Money transfer and securities, not so much.
Too funny. Yeah, that's too funny. That's crazy town. So your very first, I would ask you, your very first investors, do you remember who they are? Like the people who very first started using your platform, do you remember them?
I remember, well, yes. I mean, we knew them personally because we hosted cocktail parties, in Atlanta. Well, cocktail party sounds very fancy. We bought beers for people who signed up on Facebook, and I wrote the Facebook ads. I paid
Oh my God.
So yeah, we met a whole bunch of them who were willing to sort of tinker with this before it was a thing, and who had a lot of feedback and advice. And the very first angel investors in the company, the very first I mean, the company's now raised something like $34 million in equity from our customers, about a total of 42 all in. I mean, I remember the first closing for $150,000 on a convertible note, right? That enabled us to finance some of these barbells, in their early days, where I could stop paying for things out of my own personal funds.
I know.
Those are the days.
Yes.
But yeah, I remember really, really well. And we knew a lot of these investors, still do know many of them, and so many of them are still with us. We've had some who've died along the way. We've been around long enough that we've actually lost some, to human causes. But yeah, no, it's one thing I like about investing is it's very personal. It is different people have different assessments of risk, different things they're trying to achieve in their life. They're at different life stages. And it's interesting to me as a hobbyist to listen to how people think about investing, whether they're just getting their first job and I'm like, hey, try our app, or whether it's somebody who is an experienced real estate investor and I'm showing them the cutting edge products that we're building that allow them to buy equity or buy a share of cash flows, or we're always tinkering with all these advanced products that we imagine getting to the mass market someday. And everybody in between, right? To me, I love talking to investors, for sure.
Yeah, no, and there's more and more products, really unique situations. Okay, another female founder here in Austin has created as like an SPV for, but they're not kind of, they're investing in real estate, but kind of not. But it's cool because they use technology that they put on real estate, right?
Oh, there you
And
go.
it's really cool. So she does an SPV for it because equipment is super expensive, but it
Yes.
does like, it's like Placer AI on crack. And so it'll capture, um, it'll capture the people, the devices in the cars that are driving by. And so people
Wow.
want that data, right? So,
Yeah.
and the people that they install it on will want that data. But then there's a service around, she does that, but she's like the broker. She'll find the location. So she's kind of like a real estate broker for this equipment. It's really unique. And she'll create a special purpose vehicle for that one location, and she'll
Oh,
go
wow.
arrange the lease, get everything, put it on the roof, and then they get paid by however many devices drive by it, basically.
Oh, interesting.
Super interesting. And I was like, girlfriend, how did you come up with? She goes, well, I used to be a developer. And I was like, oh,
Very
okay, I
cool.
got you. And then my co-founder is another woman, and she's been in marketing forever. And I'm like, okay, now I get you. Now I understand how
Yep.
this came together.
Yep.
Yeah, I know for sure. Yeah, yeah, yeah. It's really, but all those different ways people are, thinking outside the box on how we approach certain solutions to real estate and using financial model to get there, right? And
What
use,
you realize is that what I've come to realize is that from a prop tech perspective, capital markets are important because capital markets determine
Mhm,
what gets built by whom for whose benefit.
right.
And that makes it an important part of the of the technology stack, right? When you're thinking about, and we don't think of technology as, we don't think of money as technology, but it is.
It is.
It's an important technology, and capital markets technology is important to those questions. And so when I've met a lot of people across investors across prop tech, and they're like, wait a minute, is this part of prop tech? Well, let me pitch you on why it matters.
Yes,
For if you
I
care
know.
about climate change, or you care about
Yeah.
housing affordability, or if you care about what types of structures get built where, here's the reason that capital markets matters, right? And so we've been playing in that space for a while. And
Mhm.
I think when I look at some of the projects that we've financed, like pad split projects that allow people to do workforce housing, or we finance um, uh, accessory dwelling units, ADUs in different
Yeah.
markets, right? There are things that new sources of capital structured in new ways can do that traditional sources of capital might be slower to do, for a bank or even a
Yeah.
private equity fund.
Yeah. No, no, no. Like the whole Airbnb thing and people buying vacation rentals, there was no
Sure.
financing for that. There was no,
No,
I mean, it was no, well, there was financing based if it was a long-term rental, but they weren't
sure,
using the pro forma of a vacation rental, right? They
right.
just wouldn't do it. It was like broke their brain or whatever, right?
This is an example of like a cutting edge product that we've been tinkering with. You can come to ground floor today, and if you qualify to invest in this product, you can buy a share of the cash flows of a short-term rental
Yeah,
portfolio, for
that's
example.
cool. Yeah,
Which is
yeah,
pretty
yeah.
cool. You can build a portfolio of
Yeah,
flowing portfolios, which is,
that's
pretty
it.
cool. It's an
Right?
interesting way to make money as an investor, right?
Yeah.
To make income.
Yeah, because I mean, it's typically it was like, okay, you can be the debt person and make money, or you can be the equity person and make money and hope your operator doesn't screw it up. Like it's kind of, yeah, it's kind of interesting. But now we got all these different ways to do it.
Yes.
It's pretty groovy.
Well, and one thing I'm excited about is we started in the debt category.
Hmm.
We moved into the equity category, like, because we realized people trusted us and wanted to participate in
Hmm.
a broader range of, risk.
Yeah.
They wanted, the debt is great because it's short term. There's not much volatility. It's very high yield. It's unlike a lot of other products that people have access to. The
Hmm.
equity is interesting because you might make more money. You might lose more money. You don't
Yeah.
know, equity,
Yeah.
right?
But you have
And
to
the
do
cash flows
it.
are interesting because they're very consistent. They're very, and they can be pretty high yields as well, because
Yeah.
it's not collateralized in the same way
Yeah.
as a loan would be. So we've been looking at all these different formats of investing product, and we're seeing so much appetite from people who want to opt out of private markets. They
Mm.
want to get into real estate, but they don't want to write a $25,000, $50,000 check to participate in a commercial real estate syndication or get tied up in some fund that does those deals. You know,
Yeah.
that looks risky to a lot of people, right? Who maybe don't feel
Okay.
so confident about it.
Well, especially in this economic environment, right?
Yeah.
A lot of people are scared.
I mean, by
So
contrast, if you download our app and the average person puts in $1,000 or $2,000 into the app, you immediately have a portfolio of dozens and ultimately hundreds of loans that are automatically, indexed for you and start cash flowing for you. I mean,
oh, that's
it's a cash
great.
flow machine,
Yeah,
you
no,
know,
that's great. That's great.
that's good.
There's another founder thinking really outside the box too, and they created a fund around the earnest money deposits. So
There you
it's just, and
go.
so
Yeah.
people, because when you're a real estate investor or developer, you get a little strapped, on cash a little bit, depending on how many projects you got going on. But if you can tie it up, right, and you can get someone to help you tie it up, right?
Yep.
And
That's
just
very
so you can get it
valuable.
under control and get, you work through your process. But it's a really cool business model, the way they protect their investors, because they basically become the buyer itself, so they can
Yeah.
control the
Yep.
contract, and then they assign it to the real buyer once everything is kosher.
Awesome.
But yeah, no, I mean, everybody's thinking like all these different ways to make money doing real estate, doing different things, right? And so it's pretty cool. It's pretty cool for sure. Yeah, it's awesome. Well, so what do you see next for y'all? I mean, I know you're tinkering and you're looking at different ways to do stuff, but is there anything like that you can divulge that's coming down the pipe?
Well,
You
one
will
thing that's
only hear
coming.
it here. No, just kidding.
Oh, sure. Well, we haven't talked about it elsewhere, so I guess, people listening will be the first to know. We will, the timing is still TBD, somewhere around the middle of the year. We will open up, we only do this every 2 years. We'll open up another opportunity for people who, you have to be an investor on the ground floor platform.
Mm-hmm.
So, if you sign up, even if you haven't invested any money, you're eligible. But we open up the opportunity to invest in the company itself and sort of buy stock in the company. That's coming up soon.
That's
That'll be new.
cool. That's
We do
awesome.
that. Every year we allow shareholders to participate, or customer shareholders to participate and add to their shareholdings. Every other year we open it up publicly. So
Mm.
that's usually for about a 3 to 6 month period, where that'll be open. We're in the process. We have a couple of new products coming mid-year or probably third quarter that we're not quite ready to talk about yet. But yeah, watch the space. In general, if
Mhm.
you come to ground floor, and especially if you're an accredited investor, we can be more flexible and
Right.
we can offer more before we go to the regulators, right? There's a lower regulatory bar. And so we tend to, like, for example, our ground floor labs products, a lot of people love those products because, we're testing, we're asking for feedback, and you can really kind of geek out on the real estate itself and
Awesome.
on the investment and ask, and we, there's a product manager on our staff who just does new products all the time. And so he loves talking to customers and saying, well, okay, wait, what do you think about this investment? What should we disclose about it? What's missing? Would you
Mm,
invest? Why not? How would you decide how much to invest? What
right.
else would you like to see? What kind of reporting do you want? And so it's an opportunity to sort of participate in the product development process for people that like to geek out on that. And it's also an opportunity for prop tech founders who have an opco and maybe a propco
Mhm.
to experiment with retail investment capital for the propco,
Oh,
right?
yeah.
So a lot of us as founders are trying to go get institutional money to finance the company and maybe help us get off the ground for the capital part of
Right.
whatever we're doing in prop tech. We've met a lot of them who've come to us. We think we've done 6 or 8 partnerships now where we work with them to engineer a retail investment product that they can offer on our platform.
Oh,
And if
that's
it
cool.
catches on and it fits, if it does product market regulatory fit,
Mhm.
right? Then maybe it's a product that we could scale up, right? And that could be the next big hit product, on our platform. So we're doing a bunch of that. I'd say those are two things worth checking out. Our forthcoming stock offering and if you're an accredited investor, the Ground Floor Labs projects are pretty cool.
No, no, that's really cool. I mean, I know prop tech companies are always looking. I mean, look, there's not a lot of specific capital chasing prop tech, right? I mean, it was this shiny object for a while when real estate was going gangbusters, and most not traditional investors, prop tech equals real estate, but it really doesn't. I mean, we service the real estate industry, but our
Sure.
technology is basically going to lead this dog out of its doldrums in the pit that it's in into the new era. We're basically going to have to save it. But I think it's interesting that so it's we've lost our luster a little bit as little prop tech people have. Our startups have lost a little luster. So if there's any
That's
way.
right. We'll be back. Great companies are built during the challenging times. So
Oh yeah. No, 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 for sure. They are. Yeah. So I think it's good. I think the corporate sponsors, I'm finding more people willing to do that. Large real estate companies are willing to venture back certain because you don't have to explain what the product does. They got it. Like,
Yep,
the real
I
estate
get
does.
it.
So those are always really, really cool to see that come into the market is really, really awesome for sure.
And there's some really good prop tech investors out there too
Yeah.
who are purposeful about it, and there are great prop tech angel groups out there now, that are, really active. If not deploying capital, at least, providing feedback and
Oh yeah.
helping
Yeah.
people evolve and find partnerships and find commercial agreements. Because the best way to finance your company is with revenue,
Yeah,
right?
no, 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 for sure. I mean, it's
Every
either an
time.
investor or a customer. You got to get there, right?
Yep.
No, but yeah, no, I think yeah, it's still a little bit of like a tech winter at the moment. I mean, for as and I talked to some venture folks and they're having a little hard time, filling out their funds, but
Yep.
there are some that are still deploying capital. They've got capital, and it's just it's an interesting time to be a prop tech founder. Yay! You know, it's all good. But I love your idea. Like once I get big and my company's good, and I'm gonna totally steal your idea and I'm gonna offer it back out so people can double down and they can my customers, if my customers want to invest, I think that's a fabulous idea.
I mean, who knows your product and the value of what you do better than your customers,
Oh,
right?
exactly. Yeah.
No venture investor is ever going to experience that value like your customers are.
Right.
Hopefully you can help them to see it, as best they can, and they offer other value, right? But nobody gets you like your customers get you.
Oh, yeah. No, no, for sure. Well, this has been such a cool conversation, and I got to keep your Gestapo on, from coming knocking on my door.
Our
Going, he's
people,
busy. He's a busy
our
person,
people.
lady. You can't monopolize his time.
Well, I'm happy we spent some time together.
Yeah.
Thank you very much for having me and for spending the time with me.
Yeah.
And if people want to engage about ground floor or entrepreneurship or anything else, my email address is brian@groundfloor.us. It's Brian with an I. And I also like to engage with people on Twitter. It's just Brian_Daly. And of course, our website's groundfloor.com. And
Awesome.
I love hearing from people. So
Yeah,
if you have something that's in this arena and I can be helpful, please reach out.
for sure. Well, thanks for coming on. I appreciate it.
You bet.
All right.